Hello, my friends. Brett Pattison coming at you from the financial capital of the West with the chairman.
How you doing, Brett?
The chairman, as always.
Doing good.
I'm doing good too,
Good,
Brian.
man.
It's a great day. In fact, let's talk about the market.
Good.
Market's up again today. Hey, let's look at your returns. NASDAQ. Well, let's actually even start down. Let's talk 1 to 3 year treasuries, Brian,
Okay.
because that gets me fired up. 1.3% on the year.
Up.
Okay?
Yeah.
Yep, up. 20 year up 6.97, which we left the short end of the curve, went the long end of the curve with clients, which I'll give you and Spencer high fives on that. Good call because it's working. Aggregate bond index, corporate bonds up 3.14.
Okay.
S&P's up 7.4. And are
Yeah.
you ready for this one?
Yeah.
NASDAQ almost at 20% on the year, 19.2%.
Yeah.
Those are great returns.
Pretty much almost the opposite of what happened last year, somewhat.
Yes.
Yeah.
The NASDAQ led the market down last year, is leading the market higher this year.
Except for bonds. I mean, bonds are up this year, but they also led the market down. And
20-year treasuries.
they're not leading the market up this year, but they're up.
20-year treasury was down more than the S&P last year.
Yeah.
And it's up less than the S&P this year. That's an awesome investment.
Yeah.
Okay, but here's the question I have for you, because we've been meeting with clients. We love our clients. We're doing annual reviews as we always do. And if we haven't talked to you this year, trust me, we will. And most of our clients come in to these annual reviews and it's a little gloomy, meaning there's so much pessimism that is out in the world today. Here's a few examples, okay? Headlines. Remember Jay Leno and the headline days?
Oh, yeah.
Those were the best. Some of these could qualify. One of Wall Street's, it doesn't even say one of Wall Street's. This is Wall Street's top strategist says a 20% tech stock rally, which is the NASDAQ up 20%, it's gone too far. And the sector will return to new lows. So down more than it was last year. Okay? Out of 400 investment professionals surveyed, only 16% thought that a new bull market had begun. That which means 84% are still bearish. Okay? There's more.
So what they're saying is the market hasn't bottomed out yet.
No.
It's
like this, dude. We're going to new lows.
New lows. Okay.
Yep.
New lows ahead of us. Yeah.
So you can go long and short the S&P 500 via futures, the futures market.
Yeah.
There's more short futures on the S&P. So more people short the S&P, which means more people think it's going to go down than at any other time, even more than COVID. People are bearish more now. I'm talking this week than they were during COVID.
You know, COVID was something that just hit us so fast and unexpected. And it seems like what we're going through right now is a slow moving train. Just, there's a big hazard ahead and we're slowly moving up on this hazard and it's just slowly coming. Everybody can see it.
Yep.
They think they can see it.
They think they can see. Is there even a hazard?
Is it a mirage?
Let's talk about that after I finish these great headlines. I just printed. So this is just marketwatch.com because it's the greatest, I'm going to use that P word that nobody likes, financial porn site there is. It's marketwatch.com. Inflation is easing, but guess what's on the horizon? A recession. Yep.
Yeah.
And did you know that banks are going to fail left and right here coming up? There's a big picture of a bear. And this would scare something out of everybody. And here's a new one. The $1.5 trillion commercial real estate market, at least this portion of it, it's going to completely be destroyed because people have to refi here in the next few years. And office vacancies are highest on record.
Yeah.
And so there's a bubble. And last but not least, There's more money right now in money market funds, which is essentially cash, than ever before in history. And Bank of America says it's the next bubble,
That's a head scratcher.
which I'm trying to figure out.
I'm trying to.
How is holding a lot of cash a bubble?
Yeah. Well, I don't know. It's a,
Pessimism, my
yeah,
friend.
yeah.
So much pessimism. So my question to you, with all of this
Let me.
going on,
Yeah, go ahead.
how can the market be up 7.5% S&P and NASDAQ up 20%?
Yeah.
Because our clients, they're seeing their returns, which is between the S&P and the NASDAQ, most of them, and they're like, whoa, wait, what?
Yeah.
How can that even happen?
Yeah, I mean, it's been a pretty, good year so far. I mean, our investment accounts are doing well this year. How can that happen? Is because businesses don't stop and say, "Oh, man, a recession's coming. We better, not go to work today." No, people keep going to work. They keep generating revenues and profits. And here's the other thing: businesses are tightening their belt. They're not spending like they were,
Mm-hmm.
and a lot of times that means that profit, if they're reducing their expenses and revenues aren't dropping too quickly, which they're not, the news continues to be relatively strong economy, or we're still seeing a good economy. I don't know if I want to say strong, but the economy is still
Yeah,
relatively
still
healthy,
chugging along.
still chugging along, and expenses are going down. So what does that mean? It means profits are going to be going up, likely. It could be.
Okay, so why, if everyone is predicting a recession, and everybody is, they think we're going into a recession,
Yeah.
how can the market be up?
Here's the thing. We very well might go into recession.
We could be in one right now.
We could be in one right now for sure, and we won't know. The funny thing about recessions is the official people that announce whether or not we're in a recession right now or when it happens will tell us well after the recession has started. They'll say, "Oh yeah, we officially entered the recession 6 months ago or 3 months ago,"
Yep.
and likely the recession will be over by the time they announce it.
Yep.
So that's
And the market could be up another 15%.
yeah, and the stock market is always looking forward. Investors are always looking forward. And so if everybody believes that we're going to have a recession, the recession is all likely priced in already. Now, some of that. Now
Explain what that means, because last year the NASDAQ was down 33%, and some of those companies were still producing really good profits. Was the recession priced into that market action last year?
that was part of what was priced in last year was when we were down 33%, or a lot of stocks were down even more than that.
Yeah.
They're pricing in a recession. The other side of that story is interest rates were up a lot last year. I mean, crazy amounts of last year, and that also reduced valuations in stocks
Yeah.
and businesses,
And
so
now interest rates are starting to come
now
down.
interest rates are come down, so valuations, or at least cash flow, is
Yeah.
more valuable today than it was at the start of the year because interest rates are lower than what they were. So that's one positive sign. And we're seeing corporations reduce their expenses, and so that means profits are going to be higher. So those cash flows might be worth more, in the next 6 months, the next year or so.
What was the news like in March, April, May of 2009 when the new bull market after the great financial crisis, when that occurred? Because that's when the new bull market occurred.
Yeah, but
What were the headlines?
but nobody was talking about the new bull market in March of 2009. Nobody was talking about it. In fact, in April
Yeah.
and June of that year, nobody believed that, even though the market was rebounding and it was up pretty strong that after the lows of March in 2009, and the market was up significantly that later that spring, nobody believed that this was the beginning of a
Yeah.
bull market,
Including me, because I
no,
was short and
yeah,
I wanted to go down.
nobody believed
Yeah.
it. So
Yeah.
these things are hard, and that's why trading in and out of markets is so hard and so difficult to really make money long term. That's why you buy great businesses, you stick with them. And if you, I mean, we're broken record, but
Would
that's
you
absolutely the truth.
would you say this? 16% of investment professionals, that's people in large part in our world, advisors managing money, think we're in a bull market. Would you think that's hardly anybody? I mean, would you say that compares to
Oh,
what you saw in 2009?
probably. I mean, I
Yeah.
think it could have been a little lower in '09. I don't
Yeah.
know. I don't know the numbers
The
on it,
exact
but
numbers.
it
But
was,
it sure feels like that.
yeah, it was pretty doom and gloom at the time. And people were just kind of worn out with the market being down. And it's much like we were at the end of last year. It's been a rough year. Rough last year was a really, pretty tough year. People get worn out and they say, I just don't want to look at it. I don't. and
And they
it's
listen
it
to the news, and
and
the
it
news is just terrible all the time.
it kind of explains what we're experiencing now. When we talk to clients, they say, "Oh yeah,
Give me the
it's,
bad
give me."
news.
Well, guess what? We're up this year. I
Yeah.
mean, we're having a pretty good start to
Yep.
the year. So,
Okay, so two last questions for you. The one of them is, we were texting, you and I and Spencer were texting about money market funds being the next bubble. And so many people in cash right now or in a money market.
mhm.
Spencer sent a text and said, how do we short the money market? Okay. Because if that's the next bubble that's going to pop, then how do you make money on that bubble popping? Which really is, I mean, what's the money market bubble popping?
Yeah.
How would you make money on that? Tell me what you would do.
Well, I 100% agree with what you said in your text. You said buy stocks.
Why? How does that?
and I
How?
and I
Why?
said, yes,
That's the
that's
answer.
the answer. You buy stocks.
Buy
When
stocks, but
there's so
explain
much
it.
pessimism in the market, in financial markets with investors, it's usually the right thing to do is do the opposite. Do the opposite. And
Amen.
think about this from a psychological standpoint. From uh, when you see when people are really pessimistic, they're probably already out of the market. They've sold their stocks. They're already out. So most sellers that are pessimistic, most people that are pessimistic are already sitting on the sidelines. So what happens is the rest of the people are long-term investors, business owners.
Contrarians.
They're probably not going to sell.
Yeah.
And so the sellers are already out of the market. So then what? Well, the market starts inching up like it has so far this year. And then slowly these people that realize, wait a minute, I'm missing out on this new bull market. I better jump in. And that's when you see, markets really rebound. Now, we're not saying that this is it. We don't know. But historically, that's what has happened. And we have all kinds of charts and graphs that show that when there's a lot of pessimism, that's a bullish indicator
Yeah.
for stocks.
Sir John Templeton said, bull markets are born on pessimism. We got $5.1 trillion, $5.11 trillion in money market funds.
Mm-hmm.
Highest it's ever been. What happens when that $5.1 trillion starts to get back into stocks? I'll tell you, it's an average bull market that's 5 years long and 300%.
Yeah.
That's what happens.
Yeah.
Why? So that's the first question, right? Okay, buy stocks. Great. Love it. Why should our clients, anyone listening to this podcast, why should they be optimistic in 2023, 2024 about the businesses that they own?
Because we own great businesses that continue to grow, continue to increase their intrinsic value, and they're going to be worth more, next year, the year after. And so, I mean, the big if is if inflation turns around and starts going back up. I think all bets are off. I think that's going to be a difficult time for stocks to do well. But right now, the trend is saying that this economy is slowing down, prices are easing. We
Yeah.
we had good numbers today. We had good numbers yesterday. I'm cautiously optimistic that inflation is coming down. I don't think it's going to get back down to 2% by the end of the year. It could. I mean, would I make a big bet that it wouldn't? No. But would I make a big bet that it will? No, I wouldn't. I don't
Yeah.
play that game. I'm in it. I'm a business owner. I plan to own these businesses for the next 10 years. I, it doesn't really matter what's going to happen in the next 6 months with the, interest rates.
And as Warren Buffett said in his recent annual letter, it's the tailwind of America, right?
Yeah.
That's going to help with these businesses.
Anytime you've
So,
bet against America, you've been wrong.
yep.
You really have. Long term, it's been a losing bet to bet against America and our progress, and we will continue to progress and grow, and we'll be a better place than we were, you know, last year, 10 years into the future.
So here's the last headline I'm going to share.
Okay.
It's from a publication that is written for advisors like us. And the headline tells us, Brian, based on what the market's doing, how should we invest? It says how to invest in April in this given month.
Mm-hmm. I laugh at that. We both laughed
Why?
at it. When we read that, we laughed.
It's
Is
ridiculous.
Is your time horizon April?
Is it April? But that's every one of these headlines.
Yeah.
It's a time frame of 1 month. We don't care about 1 month.
Well, and that's if you turn on CNBC, even Fox
all
News,
it is.
that's all they're talking about is what is the market going to do over the next week, tomorrow, the next month. We don't care. And the reason that gives us a big advantage is because they say, well, we're going to sell if we think stocks are going to go down in April. Well, guess what? We're going to buy in April because we know that a year from now, it's very probable, the statistics will say a year from now, 75% of the time stocks will be higher a year later. And over a 3-year period, it's like 80% of the time. And a 5-year period, it's like 90% of the time stocks are higher. We know the probabilities are in our favor as to be a long-term investor and quit worrying about what's going to happen tomorrow or next month.
That's the biggest point of this podcast. Quit worrying about all the headlines that you're seeing and what's going to happen in the next month. As people probably know, I'm a very optimistic person. And I'm not going to tell you
That's an understatement.
my target for the S&P. I'll let you know when we're there.
We're not there yet.
It's going to happen.
We're not there yet.
It's going to happen.
Yeah.
But there are plenty of reasons to be optimistic in this market. So put away the how to invest in April headlines and the bear headlines, and we're heading to new lows. I don't know, but there's plenty to be optimistic about.
Well, and there's always plenty to be optimistic about when we're looking out long term.
Absolutely. 100%.
I still kind of say it. I don't know what 2023 is going to bring. I don't. I'm optimistic that this 2023 will be a good year, but despite all the negative news out there,
it's crazy.
And I, like you, I'm always pretty optimistic about the future. I'm probably less optimistic. I'm usually agnostic about the short term, more optimistic about the long term, and that's how I am today. But I'm not too worried about. I mean, I worry about inflation and all that kind of stuff, but
sure,
we're gonna get through it. We're gonna get through this, and
giddy up.
Yeah.
With that, my friends, keep a smile on your face. It's gonna be a great year.
Yeah.
Until next week. Bye-bye.